Abraham is writing us from Guinea, West Africa. Hello, Abraham. Abraham wants to know, what is the future of cryptocurrency? That's his.
All right, that's a general question. Okay. It's what is the future of cryptocurrency? I think that there probably haven't been as much a disruptive force as big as cryptocurrency since the internet, first and foremost. Um, I've been reading, I talked to Ted Bauman about this morning. I've been reading a lot about like the Industrial Revolution and trying to see some parallels with the information revolution, which we're going through right now. And I think one of the coolest things is that, the steamboat was created in the early 19th century, right? And at the time, it was like a marvel of the world because when you had a steam engine, you could now transport goods much more easily, especially in America. And after the steamboat was created, it first initially was like to ferry people from New York and New Jersey back and forth. And then they figured out, well, we could go up the Hudson River and get like stuff from the farms and bring it down to the cities, and then we can export it. And then they're like, okay, let's build this Erie Canal because now we can open up the Midwest. And so it led to this canal mania, right? They were building canals in Pennsylvania and Maryland. And this was like the heart of the Industrial Revolution at the time, the steamboat, right? Everybody was like, steamboat's the next big thing. Well, sometime along the way, like we had to get more coal for the steamboat. And so people figured out that they could move coal from the mines to steamboats faster by building these basically railing systems, which are very like crude wooden railroads. And they would have a horse pull the cart of coal down the rail. And then somebody said, why don't we put a steamboat engine on this thing? Right. And so they built a train. And then the train basically made steamboats obsolete because now you can move things much more productively. I see a similar parallel to the internet that was created to share information from one place to another across space and time, and also cryptocurrency and blockchain, because now you can take all those digital resources that we have in the internet and provision them in a way that there's not one central oligopoly sitting on every transaction that happens on the internet, right? Like think about some of the internet businesses that have blossomed, like Uber. You ask an Uber driver how much Uber takes, and it's usually like 20%. I mean, could you imagine? Like all they've done is build this like simple protocol that pairs riders and drivers. You could build a decentralized platform where the drivers are making more. Same thing with like everything in finance, where every transaction you do, the bank takes a little part of it. Well, decentralized finance is going to totally revolutionize that. It's going to allow people who have assets to become their own market makers and replace the market makers that charge fees on exchanges and make markets much more liquid, and tokenizing real world assets. And so there's a parallel between, the internet and cryptocurrency when it goes back to the Industrial Revolution, where you had like the steamship and then the train came along 20, 30 years later, and it was like, steamboats are like casinos that you can go on right now. Like we don't use steamboats anymore. I mean, as you use cruise ships, but like they're definitely not as big as trains and other forms of transportation that we have today. So that is, I think, the future of cryptocurrency. It's like the difference between the train and the steamboat.
Okay, that's a wonderful example. I was really like visualizing everything as you were speaking. So thanks for that historical example,
Oh,
Ian.
thanks for going on the trip.
Oh, you're welcome. It was a good trip too. Okay, Joseph asks, hello, I've got a question for Ian. If you stake your Ethereum, there's a possibility that you could lose it due to something called slashing. Could you explain what this is?
So slashing is basically when there's risk of staking your Ethereum, and the risk is that the way the protocol works is every block there will be a random group of stakers chosen, and they all have to have a 51% of them have to be in agreement of what is valued over the last period of time interval. And if they are incorrect, you can lose your tokens. This will happen very rarely. It won't happen all the time. And it will happen, obviously, if there's a big attack of the network. But the network is decentralized enough that it's very difficult for someone to have 51% of the supply of Ethereum and be malicious enough to attack it. So, I wouldn't worry too much about slashing. I'm sure you'll read things in the news that people are worried that they're going to lose their Ethereum by staking it. But the end of the day is, you have to keep people honest. You're going to get maybe a 10 to 15% reward from staking annually.
Wow.
Okay. So think of that as a huge dividend that network is going to pay just for holding and staking these coins. On top of that, because more people are incentivized to stake, it's going to take supply out of the liquid market. So, I probably won't sell anything. I mean, I have a position that I'll never sell, but like now I can stake it and it becomes more valuable. So more people will be buying Ethereum to stake it. And that means there's going to be less sellers in the market. And so that's going to keep pressure on the buy side because people are chasing these high rewards. And as long as they remain high, you're going to continue to see people buying Ethereum and holding it as an asset that actually pays you for, investing in it and staking in the network. In the same way that you could have bought a mining rig and mined Bitcoin 5-6 years ago. Now you just have to make the capital investment in Ethereum and stake it. One thing I want to say is that the minimum for staking or controlling your own node is 32 Ethereum, but there are ways that you can actually pool your assets. So let's say, you have 5 or 6 Ethereum, you can actually join other users through different protocols and stake and still get the same rewards. So you have to be careful though, because some places, take like 50% of the rewards for pooling you. You have to be wary of those places and try to find the ones that have equivalent payouts to what the network pays. But Thank you for that question, Joseph.
Good answer too. Okay, we have a longer question here, and it's our last Bitcoin question for this week, and it's from Paul T. And Paul T writes, Bitcoin SV or BSV was founded in 2018 by Dr. Craig Wright and the World Bitcoin Association headed by Calvin Ayers. It is the only cryptocurrency based on the original Satoshi Nakamoto white paper. Unlike Bitcoin, it supports micropayments and fees of as little as 0.001 cents and dropping, unlimited block sizes, and many, many gigabytes and growing, millions of transactions per second and growing to billions or more. The backers of Bitcoin, some of the biggest names in the world of technology and finance, made changes to the original Bitcoin protocol, limiting its block size, increasing its transaction costs so that it only, in a use case study, is a store of value. Now, BSV today is around the 50th largest crypto. Ian, what do you think of its future growth prospects and its potential as an investment?
That's a great question. I appreciate the thought that was put into this, Paul. First and foremost, I reject the premise that Bitcoin is only use case as a store of value, because there are side chains like the Lightning Network, for instance, that allow you to use Bitcoin much faster than it would take to approve transactions. So basically, the way that works is that there is a blockchain that runs parallel to Bitcoin and can process transactions faster and then feeds it into the Bitcoin blocks. Because typically, if you were going to go to Starbucks and pay with Bitcoin, in order to use the network, it could take 6 blocks, which could take an hour. You're not going to stand there waiting for your latte to get cold for an hour for your Bitcoin transaction to process. So like Bitcoin SV and BSV, well, there's other ones too, like Litecoin. They're just lighter, faster ways to transact, but they're not Bitcoin. They're an offshoot of Bitcoin. I think that most importantly is you want to see merchants that are accepting this cryptocurrency and whether or not it's growing. Okay, so Bitcoin SV does not have the utility like Ethereum does. Remember, I explained that Ethereum could be the world's reserve currency someday because it's actually backed by an asset that people want to use.
Right.
Bitcoin SV is similar to Bitcoin in that it only has the properties of a currency where it's a unit of account, of medium of exchange, and a store of value. So you're very limited basically by owning Bitcoin SV to whether or not people are going to spend it and people are going to hold it. The irony about like using something as a currency, and I don't want to get too far in the weeds right now, but like to calculate the value of a lot of cryptocurrencies, you can use an equation of exchange, which is MV equals PQ, which is basically the monetary base times velocity equals price times quotient, which is basically an appropriation of how much goods and services are exchanged in an economy, right? So we can calculate basically how much money we need to use in the US economy, and it should be equal to the goods and services that money base times velocity equates to. MV, if you do the actual calculation, the faster velocity goes up, the less money you actually need, right? So the market value of cryptocurrencies is going to go down as velocity increases. So like take the US economy, I'm going to use some rough numbers right now. So the US economy is, let's say, $20 trillion. Let's say we have from last estimates, I think about a the velocity is like 1.5. So that gives us like a $7 or $8 trillion monetary base. And if you were to increase velocity to 5, the amount of money that you actually need to use to provision the goods and services goes down. So the problem with crypto is that if you have velocity that goes up, people are buying and spending it more, then the price is actually going to go down because you need less of it to provision the things that you want to buy and sell it with. So you're actually better off holding a cryptocurrency that people are considering a store value rather than ones that are spending it, if that makes any sense. And I've followed Bitcoin SV and Bitcoin Cash, which is another offshoot of Bitcoin, Bitcoin Gold. There's a whole bunch of these derivatives since the beginning. And, I can tell you that it's like they all just support a better investment case for Bitcoin, right? It's like if you have all these replicas of something, you want to buy the original one. Don't buy the replicas. That's always going to be a replica. If you're going to invest in art, if you could afford it, buy the Warhol. Don't buy the Warhol replicas or the fake Warhol print guy that you find in Times Square. So that's how I feel about Bitcoin. It's an ode to Bitcoin that there are all these replicas that try to do it better, but in reality, like, you go in hundreds of thousands of merchants around the world accept Bitcoin, and a very limited number accept Bitcoin Cash. So I would stick with Bitcoin and not bother with Bitcoin Cash. But there might be times when Bitcoin Cash in the short or medium term outperforms Bitcoin, but I just wouldn't be tempted to chase it at that point and not under the assumption that it's going to catch up at some point. It's usually a short time period when it outperforms Bitcoin. But that's a great question, Paul. Thanks for writing in.
It was an excellent question, excellent answer. So thank you, both you and Ian, to you and Paul T. Okay, we have a question from Henry W. Henry W. asks, so I use TD Ameritrade, which will switch to Charles Schwab sometime in 2023. Should I go ahead and transfer on my own or wait and let them do it? Also, with Charles Schwab, you can buy fractional shares, whereas TD Ameritrade doesn't offer that option. Schwab also offers cryptocurrency shares. Listen, guys, I've only been doing this for about 18 months now, so I have a lot more to learn, and I'm ready to be a sponge.
Love the attitude, Henry. We love that attitude. I don't know, Amber. I mean, I'm a TD Ameritrade guy. I like their Thinkorswim software, so I'm preferential to that. I think there's a lot of like switching, like it's probably high switching costs, right? Because you get familiar with the systems, and using Bloomberg, it's like a different language, right? Like you don't want to switch Bloomberg because you've learned how to navigate through it. And I feel the same way. If you're comfortable with a platform, I would stay with it. But like you said, it's going to switch to Charles Schwab. I bet you they just keep the Thinkorswim platform is what I would assume.
It's such a popular platform. You would think that's what they would want to do. But yeah, I agree. It's just stick with what you are comfortable with.
Yeah. And one thing I want to mention too about Thinkorswim is that, these new platforms give you access to the same types of analytics that you had to spend thousands of dollars a month on 20 years ago. And, we have services in Banyan Hill that trade options. We've got amazing editors that understand these markets and can teach you about them. I would recommend following them and having them help you sort of identify how to buy and sell options, especially if that's something you want to learn how to do. You have everything basically free at your fingertips, and you can have somebody actually show you the ways.
I love it. Thank you for mentioning that, Ian. Good idea. Okay, Michael asks, hello, Ian and Amber. Thank you for your service at to Banyan Hill subscribers. I've doubled my money with your help. Thank you. However, I was up 3 times in 2021, and now I have many stocks down 50 to 90%. I need money to buy new stocks. What strategies are available for when to take a stock loss? Thank you.
So you never want to give back if you're up that much, and yeah, I always say, like, if you're up 10x in a stock and some other services, people are up 50x and 100x. In this business, bears make money, bulls make money, pigs get slaughtered. You always want to be selling when things are extreme and not buying. What strategies are available? A trailing stop loss is always a good idea, especially when you're in the money a lot, right? So let's say you're up 100 or 200% in a stock, put like a 20% stop loss in there. Trailing stop loss is a good idea. Everybody's risk management is a little different. Sometimes people are in these stocks for 5-10 years and they don't want to trade in and out of them. We provide the research and the information. Amber and I try to tell you what stocks look good in this case now. And there's going to be some situations, with stocks that you have down that are down a lot that we're going to have to get out of the portfolio in order to free up capital to invest in the better ideas. So, I would myself, Tradesmith is a great platform, can help you basically navigate. It's like a plug and play, so you can put your whole portfolio in there. It'll tell you, from a technical perspective, when things look like a better buy and better sell. And they also help you kind of navigate the volatility. They have their own proprietary indicators. I like Tradesmith a lot. So those are the type of strategies that I would use.
Okay, that's fine. Okay, we have a question from Peter Ian. Peter asks, just continuing to keep strong hands during this market volatility, what are your thoughts on these stocks? Palantir, Tesla, and NVIDIA. Also, I still like crypto, but this asset class is very volatile. With that being said, do you think government regulation is coming? And if so, how will that impact the crypto space?
Yeah, I mean, Palantir is a company that has a potentially huge market, right? They're basically a consulting company with programmers and helping every company in the world and governments manage specific data sets and make better use of their data. Obviously, he's had a rough couple quarters, but the future is pretty bright for that stock. Tesla, we sold it in the Strategic Fortunes portfolio maybe a little too early. We were up 10x in the stock. You can never go broke taking a 10x gain is what I've always said. We have it in Profits Unlimited, so now I'm gonna continue covering the stock. The idea with Tesla is not so much about EVs right now. It's like, how fast can they get to self-driving? From what I've been reading, they're a lot closer this year than they were a year ago. Their FSD program's gotten a lot better. I know you're a big bull on Tesla, Amber.
I'm a very large bull on Tesla. Yes, their FSD software is moving along, and Tesla's just so much more than an EV company, as we all know. It's a technology company. They're in energy storage, they're in solar power walls, so it's just sky's the limit with what they can do and how they'll evolve over the years. So we're long-term bulls on Tesla.
Absolutely, and they trade at a much higher valuation than other automakers, but like their margins on cars are like 25%, which is like double what GM and Ford make on cars. Although GM and Ford's margins might be going up because I don't know if you saw, they're now raising the price on all EVs to compensate for the EV tax credit. So basically, if you thought you were going to get an $8,000 or $7,500 deduction on a new Ford Mach-E, they're adding it to the price of the car. So the deduction has gone away.
Yeah,
you never want to see that, but it's better for the stocks. And lastly, NVIDIA's having a rough time lately. They make chips specifically for gaming, we've seen a little bit of slowdown because a lot of that growth was sort of pulled forward because of COVID. So a lot of gamers had more money to spend, so they upgraded their machines. And so NVIDIA is not positioned as well as some of the chip makers for the auto companies like On Semiconductor, like we have in our portfolio. But NVIDIA over the next decade is going to be the premier chip company, NVIDIA and AMD. So it's in a little rough patch right now, but I don't think the cycle's over. I think it's just kind of you're seeing some weakness because a lot of that demand was pulled forward, like I said. And lastly, on crypto, yeah, it's a very volatile asset class. I think the hardest trades are the most volatile ones. And so you can hold crypto in your portfolio, position size accordingly. Don't make it half of your portfolio, make it a smaller amount, something manageable, and just brace yourself for double, some months where it'll double and some months where it'll pull back 50%. And if you trade that way and position your size and are ready for the volatility, in the longer run, you will be happy that you invested and held onto your crypto.
Mm-hmm.
And the last question about government regulation. I think that like a lot of it is priced in. I think the one thing that'll change is a lot of these like decentralized dollar stable coins. They're going to kick off decentralized exchanges. And this is a hot take for me. It's something I haven't talked about yet. But, there's a project that we own in the crypto service called MakerDAO, and they support the DAI stablecoin where you can collateralize Ethereum and other cryptocurrencies and get something that's pegged to the dollar in return. I think the government is going to tell centralized exchanges like Coinbase and Binance, yeah, you can't list DAI anymore because of the systemic risk from a decentralized stablecoin that we saw with Luna. So when Luna blew up, which it supported a decentralized stablecoin, now the government's going to look for like who's potentially the next Luna and get them off of centralized exchanges and keep people from investing in them. But I think they will still play a big part in the decentralized world, but not on centralized exchanges like Coinbase and Binance and Gemini. So I think that's probably going to be the biggest part of the regulation that we hear.
Okay. Very good. Okay, we have a question from Amanda W. Amanda writes, hello, I have a lot invested in XRP. I would love to get your opinion on this crypto with the lawsuit, red tape, etc. It seems like it's just been in limbo for so long and is now about 0.34. Also, what is your opinion on SWN, which we believe is Southwestern Energy Company?
Thanks, Amanda. Well, first of all, I don't have any opinion on Southwest Energy. I don't cover the company, but in terms of Ripple, I would first tell you that it is not a cryptocurrency. It's a digital asset. It is not decentralized. It's controlled by a centralized company. And a lot of retail investors are attracted to Ripple because it has such a small price, right? You can get it for 34 cents, right? So that's attractive because you can buy more of it. Don't fall into that trap. Like low price does not necessarily mean just because you can buy more shares that you'll see more upside. The thing that I don't like Ripple is that it just seems that they can just print as many of them as they want, and it's not like addressing the full idea of crypto, which is a decentralized asset. So, I would get out of Ripple and get into something like Ethereum or even Bitcoin or Solana. Excuse me.
Mm-hmm.
The last thing I want to say about Ripple is, it reminds me of like Cardano too, where, and I know we're going to talk about this. They have great marketing. They market really well to retail, but I don't think that the potential addressable market for Ripple is going to be as big as what's coming with Ethereum and other layer one blockchains.
Okay. That's fine. Okay, we have a question from William, and William asks, what are your ideas on TLT's treasuries, the iShares 20+ year treasury bond ETF?
Yeah, I mean, Amber, you own bonds in your portfolio, right?
Yes, I am a diversified investor.
Yeah.
So yes, of course.
I mean, everyone's got to diversify. You got to have some bonds in your portfolio.
Mm-hmm.
I'm not a financial advisor, but I think the normal calculation is you take 100 minus your age, right? Mm-hmm. And so then you get to the percent of your portfolio that should be bonds and stocks, right? So for me, I'm almost 50-50. I'm not going to ask you, Amber, but basically, TLT Treasuries is a stock that you can own in your portfolio, and it tracks a group of bonds in a 20-year part of the curve. The one thing I would say, like with these TLTs, and whenever you have like an ETF that tracks an index, mm-hmm. there's always this like carry costs where it's like when a bond matures, they have to roll over to another and you lose a little bit of that. And you see this like when people buy, let's say the USO, which is an instrument that's supposed to track the value of oil, or the GLD, mm-hmm. because they're investing in underlying products and there's a cost of moving from one product to the other, especially when you're investing in like futures, there's a carry cost. Mm-hmm. You lose money out of your ETF. So I always recommend, if you're going to own bonds, you can have a little bit of exposure to the TLT, especially if it's a short-term trading vehicle. But I would just call your broker up, and buy some government bonds, or buy a mutual fund that invests in bonds rather than the ETF, because I think the fees are too high. So that would be, and in terms of like, where is it going now? I mean, look at yields. If the yield of the 10-year Treasury note, which we covered last week, goes above 310 and 350, TLT is going to go down. So you have to just be wary of that as well. It's been very, very volatile time for government bonds this year, more so than any time I can remember since like the late 90s, when the Asian financial crisis hit. So just be really careful in TLT, and like I said, just buy the underlying bonds instead.
Okay. All right. We have one more question for this week, Ian. Our last one from John C. Hello, John. John writes, hi. Ian, thank you for all of your market insights. I'm relatively new to investing. I have begun doing it for the long term, mostly, and kind of a hobby. I read. LOL. I am curious. It's a lot of reading. I am curious what your thoughts are on Cardano. Do you think this is a vassal hard fork, which will help it or kill it? Is it worthwhile investment? I put some money in it before the crash, and was planning on selling it when it was up, but it held out and now it's down. Now I'm holding it at least until the next rally. Thanks.
Thank you for writing in, John C. And, I love when people write in and they say, like, I'm reading a lot, because that is so important in this industry.
It's so important. Yeah.
Like, in order to come up with ideas, you just have to keep reading, read everything you can. I'm a big fan of reading, first and foremost. I am not a big fan of Cardano, John. I'm sorry. But I do think you should keep reading. I don't think you should own Cardano. It's just one of these cryptocurrencies where a lot of hype. They have a charismatic leader in Charles Hoskinson, who was one of the co-founders of Ethereum. But like, the crypto community, nobody takes him seriously. But he has been able to generate a massive amount of hype for Cardano. And, more power to him. I just don't think he's got a lot of hype, but he has not attracted the type of developers that you want to see that can help you really scale your blockchain. And so that's why I'm worried about it. And look, Cardano could go up next month, next year. It could go up in the next crypto bull cycle. But over the long run, you want to stay in the cryptocurrencies that are seeing real world adoption, that have the best developers and best investors on or engaging in their community and their chain. And unfortunately, that is not Cardano. And, Amber, we always hate to leave the webinar on a sad note, right? We always hate to leave it on negative. So, but what do I have to say about Cardano? I love the fact that he's reading, though.
Oh, that's always a positive.
Yeah.
Knowledge is power. So there you go.
Exactly.
So that's it for this week, Ian. Thank you so much for your excellent questions and answers to these questions. Thank you, everyone, for your excellent questions. A joy to read.
Yep. Thanks, everyone, for tuning in. Amber, thank you for being such a great co-host.
You're welcome. Thank you, Ian, so much. Have a great week ahead, Ian.
You too. Take care.
Take care. Bye, everyone.